I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So it's a new week with still no resolution to the government shutdown, and as now many look ahead to the debt ceiling issue on October 17th, you have to wonder, with our futures significantly down this morning, if markets are starting to lose their patience.
I think markets are starting to lose their patience. The American people are starting to lose their patience. Like, if you watch TV all weekend long, all they talked about is calamity. You had headlines about catastrophic events if we go, if we get into default, which is October 17th. And what's today? Today's like October 7th. So a lot of time between the 7th and the 17th, and every time, people have been kind of like handicapping that a deal might get done, and if they go long based on that, you come into something like today. I know on Friday, the markets were, up. Everyone's saying, okay, you know what, we're taking it in stride, things look okay. And then, obviously, the weekend events happen where they're all standing their ground and they're all talking a big game, whether it's Boehner, the president, who knows, it's all of them. You come in today and you're down 13, 14 handles. But that's been what's been going on for almost a week and a half. I remember, like, twice I was long, pretty significant amount of size, and I walk in the next day below the prior day's low saying, this is just, this isn't fun. I'm bringing my risk down, low gross, low net, until we get more clarity.
So when do you think macro investors get concerned?
I think, macro investors that have gotten too concerned over the past year or two based on some of the headlines, whether it was the debt ceiling, whether it was, the last time, or the sequester, if they sold based on that and didn't get back in, they felt like, oh my goodness, how do I get out of my good stocks? And that's a macro approach. You stay in it for the long term. If you have a macro approach, you survived 1987, you survived 9/11, you survived the financial meltdown in 2007-8 into 9. You're going to survive this. But as we've seen the composure of the market by going to the chart of the S&P, it could change here. So if you look at the chart, you will see that we've been in a very strong trend since November. Okay, and we've held it many times. This was the time in June. Here was August. What you see here is the 100-day moving average. So we've only tested this twice. We haven't tested the 200-day moving average all year. So maybe that could happen. But as of right now, look where we are. Okay, we're still all the way up here. We talked about the push through, the failed breakouts. May 22nd, that gave us some clues to take risk down, and you could have saved yourself about 5% right here, even closer. Remember that little head and shoulders top, which gave us some clues to take some risk down, and that's what took place there. And now this was that, Fed-induced breakout failure. And right now we're still holding around here. Okay, look, we closed pretty strong. It felt as if we were going to break above this descending channel here, which we still might. But the way it's happening is not the easiest. So with that being said, what we know is you have 1677, which is Friday's low, and then you have last week's low of 1670. That's what traders could trade against. Maybe buy a little bit of the spiders versus pre-market, or when the market opens. And then if it holds, then perhaps things get going. If it were to break, this is very important. Here's your trend line, and this is the 100-day, 1661. See how it acts this time to see if there's something materially different. As of right now, this looks like, if you tune out the noise, and if you didn't read a newspaper and you didn't have the TV set on, you look at the stock leaders that are acting very well. You look at we're 3% off the highs after a big run, and not much has changed. But if you turn the TV set on, you could get scared out of some decent positions.
Right. Well, you mentioned looking to some of the leading stocks. We know that in a sea of red, we looked at the strongest sectors to see how they're holding up. And we know that the biotechs have continued to lead the market, so I'm sure this one will be on your radar today.
Yes, and a lot of stocks that we've had off the charts, the price point sheet, whether it's Celgene, Biogen, or Amgen, whatever, they act well. And you look here at the IBB, which is the the ETF for it, I just showed you the spiders, which are by the 50. This is at the 8-day, above the 21-day. So if this were to continue, I doubt that the downside could, get real teeth to it. And it's starting to get a little tight here. So watch the bios to see if they could hold in there. Just as an example of a strong stock, look at Celgene. This stock, they've been saying it's been not a stock market, but a market of stocks, and that's, very true, especially for the bios that look like they keep continuing. So today, it's Celgene down a little bit, probably pre-market with the futures. See if you could buy it and for it to go positive. So that's kind of what you would want to do today. You look at the stocks in the strongest sectors that close strong to see if buyers come back.
Right, and so checking the temperature of some of those sectors, like the biotechs, the Russell has also been one of the strongest sectors and has been able to hold above the 21-day.
Yep, and that's what these strong sectors are doing. They're all above the 8 and 21-day. So, for downside to intensify, this has to change. For the current market complexion to stay intact, these things will continue to hold out, and this is where the action is for your game plan. You look here at the Russell IWM, this was the last time it broke above the prior pivot, which it's still above. Okay, this wasn't a breakout failure. And here's where it touched the 21-day. Here it's still above it. So if it stays that way, you're not going to see much downside in the market. So if you wanted to have a high-level stop here or see something change, I would say this has to get below 105. If it stays up here, then you know that money is staying here and that the next time the market gets its footing, this will continue to go and blast off.
And then meanwhile, on the weaker side, the financials have been one of the weaker groups that, although they are trying to act better, help us measure then the action that we're seeing in the XLF.
Last week you saw, J.P. Morgan start to act a little bit better. You saw some bottom action in Bank of America. So those were healthier signs, and that correlated to perhaps breaking that descending channel to the upside. You look at the XLF, and you will see that, this trend is still intact, but it's closer to breaking it. Okay, and if you look in here at closer, you'll see that you have 1973, okay, which is that low to trade against. It tested the trend line and held. It perked up on Friday, trading above Thursday's high, which is sometimes healthy. But look at all these moving averages that it's going to have to engulf to act better. So with that being said, watch here closely today. If the banks do not get a bid and they don't go green, it'll be hard for the market to come back. If the banks go green, you know what? Perhaps they absorb today, and if you look at J.P. Morgan, we've talked about, the two patterns here. So I just want to go over real quick. You remember that red dog reversal right here? That was a nice trade. And then when the market pulled in or was choppy last week, it held higher and then broke out a little bit on Friday. So look here this morning. So if J.P. Morgan, if you didn't take it home, maybe it's buyable to go green. This head and shoulders top pattern that everyone was ranting and raving about is still intact, okay, but again, never broke below the neckline. And now you have this trend line here where if J.P. Morgan continues to hold here and works on a low or higher low and continues, it can negate this pattern and the banks will be in better shape. But that doesn't come up until about 54-ish.
And the home builders have been feeling heavy as well. The 100-day has been managing to act as support for the XHB. But what level would you say it needs to hold to stay out of trouble?
It's right around there. So this open will be important because, you look at the chart here, you'll see it did hold major support, which was been around 28. Had a real nice move above it when rates came lower, on the Fed in action. Then you had this small red dog reversal right here that capped that move. And now it's, trying to hold above 30. So I guess you could say 29.82 would be, pretty big, actually, yeah, you could say this whole area between 29.50 to 29.80, that's very important there. If it holds that, there is a chance that this could be a low. There may be another pivot here to continue. But if there's no buyers there, all of a sudden starts coming back into big support, and you'll have the bears growling about how this whole thing is affecting home buying. The government shut down on appraisals and all that kind of stuff that comes with it in insurance.
Right, but then on the weakest side, we have the consumer staples, the XLP, just hanging above the 200-day.
Yes, and this is like hanging by a thread here. So if you look at the chart, I haven't really traded this group or been really watching it, but when anything's at a key level here, you want to take a little bit of notice, and it's holding above. So watch this 39 area on the consumer staples. But overall, I don't think many traders are really looking at it because again, this didn't make new highs when the market did, so it showed relative weakness. So it gave you some clues not to be excited about that, and it's just. Yeah, this is like a weird looking channel. So here's the bottom end and see if it can hold it.
All right, well, coming up, we're going to go in the trenches with gold, silver, and TBTs. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with gold, silver, and the TBTs. This morning with our futures down, gold is up. So, Scott, does that trade get more interesting now?
Not yet, but it's on the radar. You know, for most of 2013, gold's been in this downtrend, and every time it's had these false little moves, everyone gets all excited. But if you look at the chart here, they haven't added up to much. And you look, this was the top here, or that double top, and then you had this big range. And if you remember, we weren't sure what was going to go on with gold this year. And then it broke 161, which was one indication to get out, okay? And then here was your macro support, going sideways for multiple months. That was the way out. And now, you know, the bugs are saying, okay, we have an inverted head and shoulders pattern here, which if you take a close look, it looks like there's an argument for that. Okay, and with the world environment, you'd think maybe it can get going. Here's your left shoulder, your head. Remember the blood on the street lows. You know, you had a pretty nice rally back up, and now it's holding higher. So take even a closer look here. This is what needs to happen, you know, step by step. You know, first of all, it's been very random and hard to deal with. You know, micro step right here, 127.81. It's got to get above 127.81 to even think about breaking this trend line here, which really doesn't get broken until it takes out 132.79. And if that were to take place, then you have this trend line here, which comes in around 137.55. So those are the three areas that need to happen, and I really think it's going to have to happen in like a blast off. Okay, not a trickle, because it's got to get people going. It's got to squeeze some shorts, and right now it's tight, so keep it on your radar. But I would think that if it was for real, it would have been gone already.
Right, that new bull market in gold that all the gold bugs were talking about. Still, a lot needs to happen before we can actually call it that.
You first got to get a good trade that actually is sustainable, not random, and happens intraday versus overnight, because that's what's been going on in gold.
But I'm sure a very similar case then with silver as well.
Yes, silver gave us a really nice trade. If you remember the blood on the street lows, I think silver's a better buy between 17.5 and 18.5 versus sell, but that's when it came down from a lot higher prices and it was drastically oversold. Now, if you look at silver, you'll try and see if it's interesting here. You know, you look at this trend also. Look at the peak here. Wow, this is, you know, this is lots of trends here. Okay, and this one is still, you know, just closer to the lows than to the highs, and not that interesting. But if you want to take a closer look here to see if we can get some kind of fear trade, because that seems like what the Congress wants us to do, is put on some fear as they talk about calamity and catastrophic events. This was the blood in the street lows right there. This was that nice trade that started right there. And then you did get one trend line break, which came in right here, okay, to then get resistance right there. And now it's, you know, moving lower, and I guess you could say this is a level for silver. If silver were to get above 21.26, perhaps you get a move up, and then again, just like gold, you have a price point here at 22.58, and then you have another one here at 23.84. So a lot has to happen here in silver for this macro inverted head and shoulders that some keep pointing to make it get a little bit better. But overall, you know, I have a feeling that Washington's not going to solve the problems, but something's going to happen, whether it's 2 days before, 2 days after. And if gold and silver can't get going now, you know, if all of a sudden, you know, things get back to normal, you know, whatever normal is, the new normal, you know, this is going to continue in its current trend to the downside. So I would just wait for more data if you're trying to make big bets in any of these metals.
Well, and we've also talked a lot about the 2013 theme of going long the TBTs in a rising rates environment. Does that theme now remain intact?
It's still there. It changed. It changed on Fed Day when that upper wedge broke to the downside. If you're an intermediate active guy, I said, you know, if this breaks, get out of the way, because we could see a move lower or a corrective type move, because the speed will have changed, because rates shouldn't be seeing 3%, you know, on no tapering or whatever. So with that said, you look at the chart of the TBTs and you could see here that, here's the move that started back in May, which was fast and furious, and then it, got another trade ignited when it crossed above this recent resistance. And then from there, you had a decent trend all the way to the top, which was 82. I think our thesis was to 80 plus. So anyway, with that being said, here was, when it got a little wishy-washy, okay? If the Fed would have done something here, perhaps, rates could have continued to rise, but they didn't, and that was your day to get out of the way. And then it hovered below, and now it's continued. So, I would say some are trying to play versus area, which this is a spot that if you want to do a tier in process, this would be, step number one, right around this 100-day. And then the 200 days all the way down here, which also probably will move up if it does get there, and that would correlate to where it broke out from. So it's kind of trapped in no man's land. It's below this trend line, and it's above this major support, so it's smack in the middle. So I would keep it light here because I don't think this really knows what it wants to do. And most people that talk about the yield, they're talking about like 2.44 that needs to hold for for them to remain intermediate bullish on on the 10-year rising.
Right. All right. Well, let's do some quick hits here and check in on some leading stocks where the action's been pretty mixed and erratic. Let's start with Apple, which was choppy last week. We did see a gap up this morning on a Jeffries upgrade and a clean bill of health on its tax practices. Are these the kind of catalysts that the stock needs to really get going?
They could help it. Last week I was trying to play it at a really good trade, and then I added on at 492. I think it was Thursday, and wasn't pretty. And then Friday morning was weaker, and then it got stronger. And now it's up $3. I think traders are getting really just, I don't know, upset with this stock. But then when you look at the chart, it still looks somewhat fine. Here's that lower area. This was that move after earnings that was pretty powerful before. I'd say coming under some pressure, held where it had to, and now it's in this upper area. So. Step by step, first it's got to do is hold the pre-morning gains. I think it's up about $3, so it's probably up above Friday's high. So if it could maintain above this, I think some people will start, getting a little bit more committed to it again, even if you did get stopped out. And then really that buy price again is 292-ish for it to break this trend line, okay, for it to start acting better and to get to what Jeffrey says could be. They put a $600 price target. I do think it's the same analyst that downgraded it, but I'm not going to get into that. But anyway, chart still looks okay, just wasn't ready last week.
What about Amazon? Was actually able to demonstrate some relative strength on Friday, posted almost a 1.5% gain. Will this one be on your radar today?
Yes, and this one too has been acting better, but there hasn't been that much momentum in a lot of these names where they look good and they look like, okay, momentum's back, and then boom, no momentum. Not good for momentum traders, right? I consider myself somewhat of a momentum trader. So if you look here on Amazon, though, on an intermediate time frame, it still looks good. Here's when it broke out, gave you that move into earnings and then failed, retested this, broke above the descending channel. Here is your bull flag, where this was actually a really clean move, and it's still holding above this area. So, you want to measure it closely. It's down $4 today, or $3 pre-market. Maybe look to nibble versus the 21-day, which has been holding this entire time. So could be an opportunity. Did close somewhat strong on Friday. This was that fake out move, which most of the high beta did on Thursday. So staying above 309 to 312 would keep this in the game for then a potential move if the market gets a little bit more clarity and some of the circus clowns in Washington take off their makeup.
And Tesla was a focus last week. It does look like it's trying to regain its footing. Had that 4.5% about gain on Friday. So is the trend still intact here?
The intermediate trend is still intact, and there was some cute money to be made last week. A lot of guys were like, okay, we break below the 8-day. They'll get stopped out of their current position, and then short-term guys look to get short. You can short stocks in this market, which I'm not the best at, but guys on the site, we're talking about shorting this thing at like 185, 184 for at least a test of the 21-day. And if you look here, not only tested the 21-day, it actually tested the trend line, which went down to 168. So, this move from 188 even when it broke there. So 188 to 186 down to this. That's 20 points to the downside, and then some, caught a little bit of a long on Friday. Now today I'm not sure if it's up or down a little bit, but see if buyers come back and see if it builds off of this trend line. Okay, I would say if it were to get above Friday's high of, what is this? This is 181.18. Then see if it could reclaim the 8-day, which now is at 182.38. So some resistance, and it's already negated some of the power of this down move, but it's really got to close back above 185 for the short to start to get a little comfortable, start worrying once again.
And Facebook, still more impressive behavior here, was able to close back on highs on Friday despite a small slide off on Thursday.
Yep, this one got me good on Friday. It's hard. I've been a Facebook bull for the entire year, fighting all the naysayers, this and that. And then I tried to be cute and take a short out on Thursday into Friday. Why not? It had its first down day, the same way Tesla had its down day and then got followed through the next day. I figured maybe that could happen for Facebook. And then they came out with the Instagram news and then, more news on Twitter. And this day, that was the first red day that I thought perhaps, closing the low, maybe we could see the 21 day. It engulfed it. I actually covered my short, saved myself some money early. I think I covered around 50, closed over 51. So today, with the sea of red, you want to look at the strongest names, right? So with that being said, I might even look to buy Facebook today. And then if it trades above 51.16, then you have 51.60 and it can continue. We talked about the opportunity here and the opportunity there and the opportunity there. So around here, I thought maybe it could pull in a little bit, and as of right now, it's still acting very strong. So don't fight this. You don't have to buy it, but don't just be a blind short.
Yeah, I think a lot of people might be tempted to fight it. I mean, considering what Facebook was and what it's been now, it's pretty crazy.
Yes, I got a lot of hate mail when Barron said $15 when I was talking 38 when it was 25.
A lot of non-believers.
Yes.
Well, now turned believers, apparently. But let's check in on Solar City as well, which had a great day on Friday, more than 5% gain. Do you think you'll look to this one today?
Yeah, this one, also Elon Musk. I love the guy. I love the innovation and the prowess, if that's a word.
It is,
that's a word. Okay, good.
Good
Not
job.
just a Red Dogism. And you look at the chart here. Solar City has not really done much since, it kind of peaked out here, after a historic run in May into that move. Then from there, it's been choppy. You did see an igniting bar right here, where I guess it felt as if it was getting choppy, but it pretty much held, the majority of that. And then it woke up on Friday, cleared this area. And if it's down a little bit today, maybe look to buy some because this is a nice pattern here. And, did reclaim some moving averages, closed strong. Let's take a look at the volume here. Basic studies, volume. Was there volume on Friday? Because volume has been hard to find. Yes, you did have some volume there. So look to this one. And then if this were to take out Friday's high of 37.76, the peak here was 39.21.
All right, so there are things to do clearly out there. What will you be focusing on as you begin the trading session?
I come in flat, so I'm going to figure out, if some of those strong stocks, could they go from negative to positive and actually hold it? Will we engulf, this entire down move? Some people say that aren't short, like, I want to be short. They might try and press the down move. So I think the question in everyone's head is, do you press a down open, for, down 120 to close down 220, or do you look to buy versus a 15 to 30 minute low, okay, with a plan for it to then be down 120 and close only down 60 or so? I'm going to go with the fact that I'm going to look towards some of the strongest stocks. I'm going to try and buy a few things, maybe even buy the spiders versus the 15 to 30 minute low, maybe against that 137.15 in the spiders. If you go real quickly to the spiders, you will see that's the prior pivot. So this is 137. Actually, no, I'm sorry, 166.84. That changed on that day. That was that 167.15. So try and be long versus that. And if it holds in, you got a good price. And then if we were to gain some strength, at some point, maybe we break above this descending channel, and then you have some decent prices. But again, I think my thesis is going to continue to be low gross, low net. So this way, I'm not frustrated as all like last week. And then when things have more clarity and are a little bit cleaner, then that's when you could put a few extra tiers on.
All right, sounds good. With that said, happy trading, everyone. Have a great day.